My name is James Mason with Transparent Traders, and what you need to know as a trader is how to use the RSI indicator the best way. I'll show you. Here we are looking at ticker WKHS, and this is the daily chart. You can see my candlesticks right here, and down here we have the RSI. When looking at the RSI, over this 70 threshold is considered overbought, and then under this 30 threshold is considered oversold. Well, a lot of people tend to use the RSI indicator and try to go short on a stock, or thinking that a stock is going to pull back when it breaks above 70. If you look at this ticker, you can see when it breaks above 70 how it actually makes one of its best moves upward. And we really don't have much data to look at in the past for it breaking below 30, but it's pretty much the same concept except for losing value. And this is the wrong way to really think about it. But I'll tell you how to best use this. And that is looking for a bullish or bearish divergence. So what exactly that is, when we're looking at this setup, if you look at the RSI, we want to see a massive run up, so a massive peak above 70. This will be for a bearish, so also it's referred to as a negative divergence. But we want to see a massive peak above that 70 threshold. What we're going to look for next is the following peak above that 70 threshold. And when you line it up on the chart, you look at the massive peak, you can see it pushed up very hard right here. And then this next smaller peak that's above the 70 threshold, we see that it's actually higher than this peak back here for this candlesticks on the daily chart. So you can see this setup. A higher RSI right here at 96.9. You got the PPS range right here. And then you have a lower RSI at 77.75 with a higher PPS value. And then look what happens next. It sells off. So if you're looking for a negative divergence to short, or you could buy puts here, this is the setup that you want to look for. And the same is true if you were looking for a positive divergence, except you would wait for like a massive sell-off below the 30 RSI, and then you would look for that following little bottom below 30, which that price value would actually be lower than the other one. And then that's when you know to go bullish on it. So this is actually the easiest way to use RSI. And let's face it, when you can find an easier way to do something that increases your probability for success, that's what you should be doing. So let me know in the comments how this works out for you, and let other people know about this course.